The following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Looking good, Billy Ray. Feeling good, Lewis. This is Larry Pesavento sitting in again for our rapidly recovering John Logan. Hopefully he'll be on the air pretty soon. The first chart that I posted in here to Tiger TV was forwarded by one of my poker playing buddies showing the QEU versus the Titanic. I think this is an absolutely unbelievable picture with the San Francisco bridge behind it. My little 4-year-old grandson was sitting here on my lap just a little while ago, and he was looking at the bridge, looking at the boat, and he said, "How did it get under the bridge?" Because it looked like it was too big. But I told him, I said, it was a very, very small picture once it went under the bridge, because the San Francisco bridge is so very, very high. And, that's a huge difference between those ships. I still could never figure out how planes can fly and boats can float, but I don't know. One of these days I'll probably figure it out. I know it's related to Fibonacci somehow, but it's beyond my pay grade, so I'm not going to worry too much about it. Now, we had a massive rally yesterday, as we could see early in the morning. Once that market in the S&P, after the first hour of trading, we were breaking above, the 1960 level. That pretty much made that it was going to make a beeline up to 1979, 1980. That was the top end of the range that we were looking for a potential market to come in. And we've got this cycle date today, and I don't want to beat the bushes and all the and everything, but it just basically if this thing doesn't work, it's going to go on up to, probably around 2044, taking out the high from September 17th. But right now, we stopped exactly at the 786. I don't know if that's going to hold or not. All I know is that this should be a really strong cycle date, either yesterday, and we could make a higher high today without any trouble at all, but we should go crazy to the upside. We should only take it out by just a little bit. Now, it's been interesting that let me put that other S&P chart up to show you. This is the one we looked at yesterday before the market opened. We were trading this was the one from Friday's close, where we went to 1943, went all the way up and made the 786 retracement up there at 1980. It was 1979.75. However, the Dow Jones Industrial Average went a great deal higher than its forecasted high. It went another 70 points higher. We were looking at around 166, and we went another 70 points higher than that. So there's still a possibility that that this can go a lot higher. And there's that bottom that we had on Friday had so many numbers there. You have to respect it. That's the bottom line. I mean, I mentioned yesterday we hit it in the NASDAQ, the S&P, the Dow Jones, the transportations hit it, the DAC, the stock exchange hit it, and then also the DAX, the German DAX hit it exactly. And then today the German DAX went up and completed that ABCD pattern to almost to the exact penny, and then broke off about 100 pips, which 100 pips in the DAX is $2,500. So you can see the volatility difference between the DAX and the S&P. It's far easier to trade than the S&P is. You don't get the herky jerky moves like we do get in these other markets. So But that was primarily it. Now, the one index that I follow, we have a question. Hold on just a second here. One of John's friends came in and asked a question about Apple. I can't help you with the user profile. All I can do is to show you, what's happened to Apple after we made that high up there at 133. We broke down to 92, which was the low of the August 24th collapse that we had. And then the markets rallied to a 61% retracement. Almost hit it twice and then backed off. And then yesterday, with the market being very strong, Apple has been up, 3 to 5 days, but it's a much weaker than market stock now. And everybody that has bought this stock since January is still underwater, because in January it was trading around 115. So unless they were buying it on that day of the 24th, they're pretty much underwater. And believe me, it didn't stay down below 105 very often. That move back up was extremely fast, as we all know. So we'll keep that in mind as we go through this. But this is this date when it comes in, like Norm Winsky's thought it was the 5th, which we had a Bradley date. We have a 6th date, which is a really strong Astro date. And so we have a 2-day window here. That means that if this market is up higher than where it was on yesterday at 19, let's say 1980 in the S&P, if it's higher than that on Thursday, that tells you that this was just nothing happening, that there's something stronger out there, and that something stronger can easily take you up to 20. And it would still be bearish, folks. That would just be a 7 and 6 ABCD correction. I mean, if you look at the market, long term, I mean, it looks terrible. And even yesterday with the fantastic, market that we had, the Dow up 330 points at one time, even the breadth was still, we had a lot of, pretty good advancing decline, which we should be having, but we barely new highs to new lows finally leveled out. So that's another thing that's saying that, we could be looking at, a bigger rally than what we thought. On yesterday's show, one of the charts that I put up there was a chart from Steve Moore at Moore Research. I don't know if you folks, if you follow commodities, you probably know who Steve Moore is. He's a class act. He's got a tremendous research facility there with his staff and everything, and he does a lot of great work. And the chart that I posted from Steve Moore, I got this from my good friend Jim Twentyman, is the fact that this was the correlation that he was looking at between 96 and 98 in the S&P, and as you can see, the correlation on this is 94%. And there's no question that we bottomed around right around October 1st. I believe the 28th or 29th was the actual bottom. So that means we could be up for 30 days to fulfill this particular pattern, and that would mean that what we're looking at in the Bradley model and also some of these astro cycles that I'm seeing is just not working, and we're going to go up. You don't want to stand in front of the freight train if it's going to keep doing that. I mean, you just don't need that. That's not a good thing. I can tell you that from past experience. Losing money is not a fun thing to go through. But losing money, you have to get used to that, because that's how we make money, is by that we have losing trades and we have winning trades, and you try to make your winners better than your losers. That's basically it. And if you got a positive expectation on your system, that's really all you need. So you've got to continue to trade. Now, you'll have bad periods, and I can certainly understand that. I go through them, and when I do, what I usually do is I take a day off and then get right back into it. I enjoy this so much that I don't take more than a day off, because it is so darn much fun to do this. Well, I have got some questions from my show, and since I'm going to redo my show at the same time, and I need to put some good content in here, at least what I think is good content, is I want to show you another chart that might be an indication that we're at a pretty good bottom as far as risk, and that is the junk bond market. As you can see, from July through November, and November through February, we made a giant ABCD pattern that measured down there to 35.40 in junk bonds, and that's a very, very important pattern that we look at. It's the basically the one that gives us the whole picture of what we're trying to look at. And I wanted to show you the larger one here, if I can just find it. Where did I put it? Always doing this, but I will get it done eventually. Hopefully, in my lifetime, and we will see what we've got. Let me see. I know it's here somewhere. Oh, Lawrence. My name's not even Lawrence. My name is Larry, and I found it. There it is, down there hidden. This is from my good friend Jim Bartolione, and as you can see, this is a little bit longer time frame. You'll be able to see that ABCD pattern, but you'll see that it's also down near the 786. Of the time from October of 2011 here in the junk bond. So this is at a real critical level in this area right here, right now in junk bonds. And if we go back below that ABCD, then you're going to be looking at much more difficult price action, as near as I can tell from watching some of those charts that we're following. Okay, 877-927-6648. If you have any questions, just give us a call. We'll try to answer them if we can. And I wanted to talk about the New York Stock Exchange Index. I'll cover the bonds and the notes, but I want to do that after we get through the first break in here. And I did cover the Apple. Oh, I know what I wanted to do. I wanted to do the VIX index here, just to show you the fact that even this was another thing on Friday that we had talked about, was the fact that this market just didn't have any fear in it on Friday. I mean, it was not. You can see the action just 2 days ago. You can just go back Tuesday, Monday, and you can see Friday's action. The VIX closed badly, and the market was down 300 points, and the VIX couldn't even take out the previous day high, with the Dow down almost 300 points and the S&P down 25 or 30, and the NASDAQ down about 60. So this was saying, wow, there's just no fear in the market. And then once that bottom finally came in at 41.12 in the NASDAQ, that was the final thing, because the Dow Jones and the had bottomed at the 786 about 20 minutes previously, and the S&P had also bottomed about a half hour previously, and it was already up about 6 or 7 points off its bottom. And then once that NASDAQ hit, it just jumped 40 points in the NASDAQ very quickly on Friday, and away it went. And folks, I have to tell you, I was actually long down there. I covered shorts, and I went long, and I got out. Oh, where I got out is embarrassing. It was a profit, but when I look back, I want to throw it. Okay, we come right back, and we'll be setting in for John Logan today.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, this is Larry Pesavento setting in for John Logan. I am going to post, in fact, I already have. I posted the chart into the Tiger Den showing sugar going back the last 8 or 9 months. And as you can see on the far left there, it made a very nice steady drive to a top pattern. That pattern was popularized, of course, by H.M. Gartley and then also by a man named George Cole. With a book he called The Secret of Speculation from 1933. It was a book of technical analysis. Now, I see what we're looking at here in the sugar is you'll notice that after it made the big butterfly pattern that you can see was just nearly perfect in both time and price, and then you have a really strong rally up to the 61% retracement up around 12 and change, dropped a penny, and a penny in sugar is $1,120, so it has some pretty good, volatility. I actually don't trade sugar anymore. I haven't traded it for probably 20 years. I don't know that's true. I had a couple trades a few years ago where I was breaking down that worked pretty good, but we've had a high of around 66 in sugar, and I believe the low in sugar is pretty much down there around 10. We hit about 8, I think, sometime in the early 90s, but recently I think $10 a pound has been pretty much it. But the reason I'm focusing on this chart here is because sugar has this October contract. There was very little sugar for delivery, and it's coming into delivery very, very. In fact, it's into delivery right now, and as you can see, the has actually gone even higher today. It's almost reached that $14 per pound level. And the reason for this is that there's just no sugar to deliver, and so the shorts have to cover, even though there's a surplus of regular sugar. Some of the other contracts are not doing this type of pattern. The reason why I'm bringing this up is because we have the potential for that same thing to be occurring in both silver and gold, and especially silver. And as you can see from the silver chart, we did get up above the 1560 yesterday, and we're holding our own up there right now. And if we get above 1580, I believe, silver could really start to accelerate. But it's not backing off very much, nor is gold. Gold backs off $4 or $5 from the high, and that's pretty much all you get. So it's acting still very bullish, both in the metals. The reason is that the deliveries on these things, on precious metals, could get out of whack. And the other thing that's there that we've heard about many times in the past is the rumor that, J.P. Morgan and one other, Morgan Stanley or Goldman Sachs, one of the other big investment banks, have been holding down silver by selling contracts and stuff. And I don't believe that's enough for 1 minute. There's just no reason to believe any of that stuff, because first of all, if it was happening, the last person to know would be me, and maybe you, but it just wouldn't be much. That's all I can tell you. In all the years that I've been in this business, and I'm talking 55 years, and I was at Drexel from 76 through 82, I never got a trading tip that worked. And believe me, at Drexel, it was around all the time. I never got any tip that actually worked. The only tip that I made money off of was at Drexel. They used to have these meetings on Monday when the stockbrokers would meet, and they had a really neat buffet set up there because Jim Twentyman's girlfriend, who he lived with, she ran the catering like Milken, and when they were finished with Milken's group, which was the second, third floor, she would bring down and set up a really nice buffet of the things that were left over. They were all, it wasn't left over, but it was stuff that they had extra of. We had that every Monday, and and they had it every day. We only had it on Monday, but they would talk about it. And then one day they had a talk about it was called. It was one of the original gambling stocks. I don't remember, Renaissance or something like that. I don't remember what it was called. But anyway, this stock, they put it on 200% margin for selling it short. That's how sure Drexel was that the stock was going to go higher. And, I looked at the chart on the thing, and it was making a beautiful 3-drop to a top pattern. And I didn't do much stock trading. I did some, and because I was registered with stocks and commodities. I had the manager, and I had 5 different SEC licenses that I still hold. But the thing was, this was a beautiful pattern. I'll finish the story when we come back on the break. 877-927-6648.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, good morning, folks. This is Larry Pesavento sitting in for John Logan. The markets are certainly really quiet this morning. I think everybody is tired, both the bulls and the bears, because of the fact that we had so much volatility with the Dow up 330 points, and NASDAQ up 70, and the S&P up 36. That they get a little tired, and maybe the buying slows down. We don't know. What I was doing before the break, I was talking about during the time when I was at Drexel, they would have these stockbroker meetings on Monday, to find what they were going to be selling that week, because they had a huge backlog of a lot of stocks. They had some huge customers in the firm, and so it was they always were moving great deals of stock. But one particular stock, and I did remember the name of it. I called Twentyman, and he couldn't remember it either, but we came close, and between the two of us, it was Resorts International, and the stock was trading at about $100 a share, as I remember, up about 20. And it was basically straight up, and I had found just looking at the chart on a 3 or 4 day period, a beautiful 3 drive to a top pattern, and Drexel had increased the margin requirements to go short by 200%. So if you had a $10,000 account and you wanted to sell 100 shares, you had to put another 10 grand in just to cover it. And so I looked at the pattern and I said, well, I only have to risk about $5 here. And I said, this thing could really come apart. And so I put the order in, and the office manager, the wire operator, alerted, because he wanted to know anytime anybody tried to do short Resorts International that they were going to, he had to approve it. And so he comes back to my office. He says, "You shorting this?" And I said, "Yeah." And he says, "It's $20,000 margin." And I said, "Yeah, not a problem." He said, "Boy," he said, this is not a good thing. And I said, "Why do you say that?" He said, "This stock's scoring higher." And I said, "Why is that, Bob?" And he said, "Well, everybody's talking about it." And I said, "Oh, that's why it's going to go up." I said, "Okay." And I came so close to selling another 100 shares to make it 200 shares, but I didn't. I left it at 100 shares. I got filled within a quarter point of the high of that stock before it went to 15. I didn't take it all the way down to 15. I think I made 35 points or something on it. But, it was it was just one of those things. It had a nice pattern, and everybody was long. And when the shorts are that scared, there's got to be something to it. So anyway, that's I never believe in these rumors and stuff. So I've never gotten a tip that ever worked. I mean, and believe me, there were some tips flying around a lot. It just didn't come. If you've ever read this book, Reminiscences of a Stock Operator by Edwin Lefevre, which is the story of Jesse Livermore, he talks in there about people that give tips, and the fact that you don't want to be a tip giver and you don't want to be a tip taker. You got to do the work yourself, and let the marbles fall where they may. Now, the gold and silver are still holding up, and we were talking about sugar before I got off on the tangent of Resorts International, but there's a possible squeeze coming in silver and also in gold. All we need is one really, really strong day. I don't know if it's going to come or not, and I could be wrong, but if we get silver above, say, right around $16 an ounce, boy, it's got nothing but air between 16 and 18. And then also gold. If gold can get above 1145, it also can really have a really good move. Now, silver has already broken the long-term trend line that I had on my in my letter this week, and as you can see here, we were looking at that at around 1523, and we've gotten up to 1573 so far, 50 cents higher than that. So we've certainly broken out. The ABCD on this measures to 1633, and as you can see, if we get through that level, there's really not much holding that back. And the key here, I don't know if it's a key or not, but the thing that I'm watching is the fact that silver just not back off at all. 10 or 15 cents, even, 1 second, please. Even after it has a really strong run, it doesn't, it doesn't give up, the stuff, very, very easily at all. And it's still trading. Look, it's trading at 1575. That's the high yesterday. In fact, it's made a new high by 2 cents. So, gold certainly hasn't, but gold's up $1 and silver's up, basically 2 cents. But silver's not giving anything back, and that's the key to, watching this, in my opinion. And in the back of my mind, I'm thinking of this possible short squeeze like they've had in sugar. And the difference is in sugar, it's a soft commodity, so it has disposable characteristics. Well, you don't have that with silver and gold. But the problem is if they don't have the silver and gold for delivery and someone comes asking for delivery for it, that's where the problem comes. Because there's only, I believe, 1/10 of the supply physical silver to cover the short positions if they were to come. If you want that information, I believe you can go to zerohedge.com, and they had a very interesting article published by several reputable research houses about the potential for this occurring. And this might be the reason for this recent rally, is that people are starting to panic a little bit. But believe me, if you know what a short covering rally looks like, as you can remember from Friday in the stock market, when one of those comes, you don't want to stand in front of that freight train. That's the bottom line of watching that. So keep that in mind. We've had a question about the Canadian dollar, because the Canadian dollar made a really big top up here, 3 drive to a top pattern. The fact is, I should show that one first. Let me see if we can find it. And I know it's here. All I have to do is pull it up. There it is. Okay, just give me 1 second here, and we'll take a look at this one here, and then we'll look at what's really happening with it, near term. You can see the 3 drive to a top pattern. That was pretty much exactly the same pattern that I was looking at with Resorts International. It was the same, only it was a stock. This was back in, it must have been 78 or 9 or 80. I don't remember what year it was, but it was one of those years. And remember, I didn't do many stocks, but that was one that I did do. Okay, now what we're going to do is we're going to take it, the Canadian dollar, and look at it on a little bit shorter time frame, a 30-minute chart over the last week, because I want to show you a characteristic that we use here when we're watching pattern recognition, and that is that we watch for equal rallies. And as you can see, when the market started down, I've marked 3 of them. There was actually 5 of them since the top was made, but each one of those rallies was about 90 pips. And we had another one yesterday, and so we're coming down to an area where we could be bottoming here in the Swiss franc, Canadian dollar, for a little bit stronger rally, and that stronger rally would most probably be a 382 of the move from 134 down to 130, and that would take you in to about the 131.80 levels, up about 120 pips from where we are now. So if you drop, almost 400 points, so 382 back of that would take you back at about 130, 140 points. So, but something big has happened in the Canadian dollar, and it is, definitely turned the corner. And this might be related to commodities, because we've had a pretty good pop up in gold and silver. We've had a little bit of a pop up in beans and wheat and corn, and a small bit in the oil market, because the oil market's still holding relatively well. It had very little sell-off. Last night we came down and we took out the previous day's low by just a little bit. And we're holding, really firm here in the oil market. We've been here for between $48 a barrel and $44 a barrel, a $4 range for well over a month now. And usually that means it's, you're getting ready for, it's a consolidation for a move higher. Now, you could also make the case that it's distribution for a move down. So what you'd want to do is you want to wait for that market, to tell you which way it's going to break out of that. So if we broke below $44 in oil, that would tell us we're going to break to the downside. If we break above 48, that would tell us that most probably we're going to break to the upside, and the target on the upside would take you to about $55 a barrel, and the target on the downside would take you down near $37 a barrel, down near a double bottom, as I look at it from a technical standpoint. And believe me, folks, this is, I know as much about the fundamentals in oil that I do in stocks or bonds or anything. I know I'm a technician. I look at the charts. That's all I do. And I watch the cycles, of course, but that's all numbers. I don't hear the fundamental stuff. The only time I ever get drawn into that is when something like zero hedge is brought to my attention, and the fact that the charts are starting to show that something like this might be happening, then I have a slight interest in it. But I don't even believe that. They have to prove it to me first, because these markets are there to give you a lot of misinformation, and they do a terrific job of it. So that's the bottom line of what I'm watching right here. Okay, let me see another question. Oh, there was an interesting post by one of our Den people about the Elliott wave, and if I had any comments about it. And yeah, I have comments. I think the Elliott wave is useful. I'm not able to do the interpretation that some of the people have with all these different wave counts. I think the Basil Chapman does a far better job with his than the Elliott wave folks do. People don't realize this, but when Elliott He was promoted by a man named Charles Collins back in 1938, and Collins died, I believe right after he started helping Elliott, and the problem was that Elliott only looked at 382 and 61% and 50%. He didn't look at the expansion numbers of 1.27 and 1.618 and the square roots of the number 5, because that's how the market really is described. And so you're only getting a part picture when you're looking at that. That's my opinion. Other people will sit there and negate this of the way I look at it, but that's the way I look at it. The things that I look at are just little triangles where I'm trying to find multiple confirmations of several things coming together. And then that's what I look at for what I think is my edge. Sometimes it's an edge, sometimes it's a razor blade that cuts you, but to keep those cuts small, you're going to be far better off than you would ordinarily be. So this is what we're looking at for today. We do have one thing I wanted to show you that's really important, since we had talking to Jim Twentyman just a little while ago. Hold on, I wanted to show you this chart, because this is the chart of the New York Stock Exchange monthly index. And if you look at this, you'll see those blue lines that I had marked there as 20-minute lines. Those are lines that go back and touch after a trend has been broken, and we've already had that done. And you'll notice that each time that happened, back in 2001 it happened, and it happened again in 2008, the market reaches back and touches that line one more time, and it usually takes, it looked on one time it took 2 months, the other time it took 4 months. But after that occurred, the market came down. So that's another thing that can happen, and that's why I'm trying to stay as flexible as I am here, because if these things do fail, then you're going to be looking at a situation where the market could rally 3 or 4 months. So you've got August, September, October. We could rally all the way into the end of October, which would be the next Bradley date, right around November the 2nd. And then that would be where the market would start down from. But the longer-term trend, you've broken some real serious things here. With the breadth of the market the way that it is, it looks bad. But if the breadth of the market really starts to increase now, and people start to come in and really start to think that the bottom is, and this thing could really start to gain some momentum, because it's sold off, and it's still, we're over 140 handles away from the high. In the S&P was at 2130 and change, and we're at 1970 and change right now. So that that's still down on the day, and the overall trend of the market is still down. What I use for the market is the New York Stock Exchange Index, and that's been the one that has kept me on the right path, all along. And as you can see here, with the New York Stock Exchange, looking at this hourly chart, we went right up into that 786 yesterday, missed it by a little bit, so a little bit higher there today. That would be it. But if we get another 2% higher here, which would be another 150 points higher on the Dow and another 20 points or so in the S&P, this thing's going to make a move all the way up to 10,500, which is another 5% higher. So, and that would still be an ABCD correction, but it would go higher. So that's what I'm looking at, from the point. So this is a real key day. We've got, we were looking at it as either yesterday or today if this was going to be the top. But, it's amazing how quiet it is, given the fact we had all that answers yesterday,
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Okay, we're back, folks. We're starting to get a little action in gold. We got up here to the 1145. We needed to get it above 1148 or 1150, then it should start to move. Silver is not moving as much today as the gold. It's been as high as 1582, but they're starting, so you got to pay attention. I think we're going to go higher in these. The best way to handle it, of course, is use a trailing stop of that you're comfortable with, and just let her. That's basically all you can do. Now, I posted as the final chart in here, I posted the Dow Jones E-mini chart, the hourly chart, to show you the range that we were looking for, that I was looking for yesterday for a potential top, and that was between 16,500 and 16,620, and of course we went another 50 points higher than that, and we've already broken through the 786 level. It's a positive sign in itself. This is coming in at what we think is a key date, and we'll see if this is going to be the case. If you look at that chart, you remember the last key date that we had was back on, September 17th, and that's when we had the turn in the market, when we had Mercury going retrograde, and now we have Mercury is going to be going direct Friday, the 9th. So we'll see that's going on. I want everybody to call my daughter and wish her happy birthday today. I've got my daughter is 47 years old today, and her older sister is 48 just this month. So I can't believe I've got kids that old. My God, I just can't even believe it. I don't even look at women on the street at that age. So what am I going to do? Getting old, getting into the 7th furlong of an 8-furlong race, boys and girls. That's all you can do. Now, I wanted to mention here about the Treasury bonds. The Treasury bonds have made a 382 retracement now from where they broke out of, on its way to that 160 and 20 level that we made on Friday, and so we should have some support here at 157 in the bonds. So watch that. I mean, they can go a little bit below it, but shouldn't go below 156.15 if they're any good, because they backed off three handles, and that's about all you get in a retracement if the market is really good in the bonds. But rates are going to go higher. It's just a question of when the Federal decides to move it. So that's all you're really going to be looking at. So keep in mind that's what we'll be watching for this time. Hopefully we'll have John Logan back soon. We certainly miss him, and I know all of our friends are sending white light out to him to make him get better. But recovering when you're in your 40s, and I assume that's how old John is, that we're going to we'll see him soon. That's basically what we're going to be looking at. Keep an eye on two things, folks. Keep an eye on the euro. Because I believe we're heading lower in the euro. We're getting some good rally. Little bounces is really all we're getting, but I think the euro is going to be heading towards par longer term, and I believe we're going to be looking at the bonds are going to be going a lot lower eventually. But right now we're still in this oversold territory. This couple days down, usually that's all you get in a good bull market, and that will had a pretty good run. Stopped exactly at the 786 on Friday, which is very, very important. So we want to watch that very closely. But the key number for the S&P, if we're above 1985, anytime midday or after the open or after the opening, all this stuff I'm talking about is cannon fodder, because it ain't going to work. That's it, boys and girls. This is Larry Pesavento setting in for John Logan. I'll be back with my regular show in a few minutes.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.